If you have been wondering how you are going to pay your VAT bill or your tax bill, or how much you should be putting aside to save for those, then this video is for you, because I'm going to be showing you how you can use Xero to do the heavy lifting for you, and how you can use Xero to help you make sure that you can pay your tax or your VAT bill. So let me show you that was such a nice intro. We'll get rid of that. My name is Ray Armand, and I am a chartered accountant, and I am here to help you become a Xero hero. I run a chartered accountancy. It's not chartered accountancy. I run an accountancy practice based in the UK with a team of 8 of us looking after multiple businesses across various industries, and I have years of experience in making sure that businesses get the most out of their Xero and run an optimal business. So let me show you how you can use Xero to make sure that you can pay your tax and your VAT bill. The first thing I want to show you is VAT. Now, the reason why I'm on the dashboard here in Xero is because what you should have is your main bank account connected, and then you should ideally set up with your bank 2 or 3 other bank accounts that have a very specific purpose, and that is to save money towards your VAT and tax bills. So as a starting point to this, to really get the power of like Xero helping you to do this, go to your bank and either go with the bank you currently bank with, or to one of the other challenger non-high street banks like Starling or Tide, and get another bank account set up and make those bank accounts dedicated to the specific pots that you need to save for. So for example, you can have a savings account for your VAT, and you can name it as such when you connect the bank feed in Xero. You should have a bank account dedicated to just tax. If you're a limited company, it will be your corporation tax. If you're a sole trader or a partnership, it will be your personal tax bill. And then you should have a general business savings account. Now that savings account is ideally to make your business as robust as possible. You should make sure you have 3 months of overhead, so 3 months of expenses sitting there as a buffer in case something happens, like COVID, or let's say you get injured or you're unwell. It's great to have 3 months of overheads that you know that your business can continue operating, and you can focus on resolving whatever issues come up in your personal life or in the business without worrying about cash flow. So if you have a strong, robust business, I would like to say you should be seeing 4 separate sort of pots of money: your main current account, and then 3 separate savings accounts. Now, if you certain bank types allow you to have pots, or what's the other terminology that they use? I know, is it Monzo calls them pots, Starling calls them spaces, but you might not need to set up like a separate bank account. You may be able to just open up little pots, and in that, when you have pots or spaces, you can't actually connect them as separate bank feeds to Xero, but they are equally as effective. So don't worry if you're not able to connect them as separate bank feeds to Xero. The key thing is that you have separate money. Where I do recommend having it in a different bank account is because by having it as part of your main bank account with the pots or spaces, you still are seeing that money every day. And what you want to do with your tax or your VAT money or your business overheads for 3 months is you want it out of sight, out of mind. So you're not tempted to spend it, because at the end of the day, that money shouldn't be touched as part of day-to-day running of your business or day-to-day running of your life. So it's good to have it in a separate bank account, because you can connect the bank feed here in Xero, but it's also just not in your line of visibility day to day when you log into your banking. Okay, so that's the setup that I recommend. Let's show you how Xero can then help you with that heavy lifting. Now, I'll work from the top down here. The business savings account that I talk about having that 3 months of overheads in, that is just purely you need to work out what are your monthly expenses to keep your business running, times that by 3, and that is the goal that you want to save towards. And once that amount is built up, so say you need £5,000 a month, you will then have £15,000 as your goal to get that savings account to. Once it's at £15,000, you can then just leave that money untouched, ready there for a rainy day. And that's going to make your business really robust, because the businesses that I see that really struggle are constantly worrying about cash flow, and it takes their focus away from actually growing their business or servicing their clients. Okay, on to tax savings. So actually, I'm going to jump in this instance down to VAT savings, because this one is quite quick and easy and high impact for you to know how much to put away. So what you're going to basically need to do is, if you keep in mind that obviously putting money aside for VAT is only relevant where you are a VAT registered business. If you are not VAT registered, this is not relevant to you. But do keep watching, because you're going to want to see the tip that I have for you on the tax savings. I'm going to make your life so easy in terms of how to know how much to put aside. So do keep listening after this VAT point, because the tax tip is very good. It's golden. Okay, so VAT savings. How are you going to work out, if you are VAT registered, how much you should be saving or putting aside each month for your VAT bill? What you need to do is, from your top menu here, you're going to hit accounting, and underneath the report section here, you should see VAT return. If that's not visible to you, if you open up the report section in a new tab here, and I wouldn't say search, because we want to actually star it. So we want to scroll down here till you get to this taxes and balances section. And there on the right-hand side, you should see the UK VAT return. You want to star that, because that favorites that report, so that the next time you hit this accounting drop-down menu, it will appear as one of your favorite reports for easy access. Okay, so now you're going to go into your VAT return. Now, with this being a demo organization, the VAT return is not connected up to the HMRC portal, so it looks like this. So what I've got on the screen here to show you is what you would expect to see if you are VAT registered and you've connected up your VAT portal and you hit this VAT return button, you will land on a page that looks like this. Okay, and what you should see is at the top here, once you've gone past all these sort of standard messages from HMRC, you should be able to see your most recent VAT return that is open and ready for submission. So we are, for example, the date as of recording this video is February 25. It's the 28th of February 25. So we're within this December to February VAT quarter. So as you are going through your VAT quarter, you can hit this review button and see how much VAT you are building up that you need to put aside. So I would recommend once a month, you put a block in your diary to sit for 10 minutes to just come and check this balance, and then to move those funds across into that separate bank account. So you're going to hit this review button. When you do that, it's going to bring you to this screen for the VAT return. And what you want to look for is this box 5-figure that says VAT to pay HMRC, and you can see in this example there is £12,052 that is due to be paid to HMRC. So because this is month 3, because this is in the example I'm using here, we're in February, and this is for the VAT quarter December, January, February, we should already have in our VAT savings pot some money towards that VAT bill. So let's say we had 8,000 towards that VAT bill. So what we're going to look at, how much money we have in that VAT savings pot in our bank. So you would come here, you would look at your VAT savings pot. What's the balance? Okay, it's £8,000. I need 12,000, so I'm now going to transfer 4,000 pounds from my main account into my VAT savings account on my online banking. And then obviously once you get those transactions refreshed in Xero and reconciled, that would then be reflected on the dashboard here. Okay, so that is how you make sure that when it comes to paying your VAT bill, you're not suddenly scrambling around trying to find the money. And also, as you operate your business day to day, you're not being kind of unduly influenced by the fact that you have £12,000 sitting in your bank account that actually is money that does not belong to you, because that's money that belongs to HMRC. So it's a great way to separate that out so that you can make business decisions based on what is actually sitting in your bank account, not money that's sitting there that it needs to be paid out because it belongs to HMRC. Okay, now we've done that. I've spoken about the business savings account. Let me go on to how do you actually know how much money you should be putting aside each month when you sit down to transfer the funds into a savings pot. How much should you be putting aside for your tax, whether that's corp tax or your personal tax bill? What you need to do, I'm just going to close these tabs here, is we are going to, I could tell you now, grab your calculators and this is the calculation you need to do. But I'm going to help you to get Xero to do that for you. We're going to set this up once off, and then in future months, you're just going to click a button and it's going to be there for you. So let me show you how you can do that. So we're going to come to this accounting menu again, and you're going to look for the profit and loss. Now, remember what I said a moment ago. If when you come to that accounting menu and profit and loss is not showing, what you're going to want to do is open up this reports option here, and that's going to take you to the screen where you can see all the different reports that you can generate in Xero. You're going to want to scroll down to the financial statement section, and you're going to want to put a star here next to the profit and loss so that it appears in your favorites in future, so that it can just appear in that drop down menu. Okay, let me just click that across. Why is it not going across? There we go. Okay, so this is the profit and loss. Now, it's always very important to keep in mind that when you run a profit and loss, you must be very aware of the date range that the profit and loss is running for. So this is showing you all the income that the business has generated, less the expenses to give you the profit. Now, it's showing you for the date range that it defaults to, which is the current financial year. So that's good. That's what we want to see. We want to see what is the total sort of profit that the business has made for the financial year which we are sitting in now. Now, if this report is defaulting to the incorrect financial year, say for example you're a limited company and you know that your year end is actually December, so why is it running to a March year end? If you need to change this what year it's defaulting to, if you go to the accounting menu, you go to advanced, and you go to your financial settings, that is where you can then select what your correct year end should be. In this instance, the Xero is set up with a year end of 31 March, which is the year end that you need it to be if you are a sole trader or a partnership. If you are a limited company, it may be another date that it should be, so do check that, okay? So this report defaults to the current financial year. You can, of course, change these individual dates or change like this month, this quarter, but I'm happy that it's landing on this financial year because we want to make sure that the money we are putting aside in that separate tax savings account is all the tax that we'll need to pay for the financial year. So I'm happy that it's defaulting to that. What we now need to do is we need to hit this edit layout button that we see here bottom left. Okay, so if we hit that, just wait for it to load. This will now show you every single account type that is in Xero. So you can see it's got all the different expense types grouped into, puts all your sales or your income accounts together, less any costs that are directly related to making the sales, which gives you what we call in accounting your gross profit. And then below that, we have all your admin expenses, which is all your other expenses or costs. And at the bottom, you then get your profit. What we want to do is we want to identify what is our tax account. You'll see here Xero has a section for tax, but there's no account currently recorded under there. So let's see here. If you on your keyboard hit the Control and the F button at the same time, this search box will appear. This is on any screen on your computer, and I'm going to search the word tax. Okay. Now, depending on whether you are a limited company or a sole trader, this will either be called corporate tax, or there may not even be, if you're a sole trader, an account that Xero has set up for you. So if you search the word tax, you're looking for some sort of tax account that Xero maybe came out the box for you, or may be that it doesn't exist. In that instance, you'll need to add it as an account. Okay, but let's go with the fact that in this example, this is a limited company and the corporation tax account does exist. Now, it's currently sitting under admin expenses. We do not want it sitting there because tax is not technically an admin expense. We want to have it separately itemized at the bottom of the profit and loss account or profit and loss statement that we're looking at. So we want to grab that figure and we want to drag it down. I'm just going to scroll and we're going to drag it and put it underneath this taxation section. Okay, so that's useful to do to make sure that when you do pay any tax, I grabbed printing and stationery. Let me just put that one back. Let's grab corp tax and put it down there. You want to make sure anytime you do pay tax that it's appearing down there. Now, the next thing I want you to do is at the top here, where you can see this rose button, we're going to hit that and we're going to select the option for formula. Now, this formula will just land wherever your cursor is. We want to grab it and put it right to the bottom here as the last line. Now, while we're on this formula line, you'll see here on the right hand side there's the option to populate the formula. So what we are going to do is let's first give it a name, and this is we call it our estimated corporation tax, or for you it might be personal tax figure. If you're a sole trader or a limited company, corporation tax. So if you're a sole trader or a partnership, it will be personal tax. If you are a limited company, it will be corp tax. So I'm saying estimated corp tax. And what I like to do is put in brackets the percentage of tax rate that I'm assuming. Okay, so I'm going to assume 19%. Now, how do you know? Broadly speaking, as it currently stands in the UK, if you assuming that your profit that the company is making is £50,000 or less, you are safe to assume that as a sole trader or a partnership, you need to be calculating the tax you need to pay at 20%. If you are a limited company, the corp tax that you need to pay, you're safe to put 19%. Okay, the only exceptions to that being is if you if your company has associated companies, but that's quite a technical term. The key thing here is that if you're putting around 19 or 20%, you're probably you're almost certainly going to have enough corp tax or tax set aside to pay your tax bill at the end of the year. What you then want to do is we're going to come up here to the formula section, and we basically want to take, I just want to minimize my face size here. We're going to take this profit on ordinary activities before tax, so the profit before tax, and we want to multiply that by the percentage. So if we click back on the formula here, we're going to insert, and we scroll down, the profit on ordinary activities before tax figure, and we're going to say times, and then we're going to go 0.19. So that represents the percentage. So, a percentage is 19 over 100, which gives you 0.19. If you're doing 20%, you would put 0.20. Another way I could do this, if you're uncomfortable with percentages, would be to say 19 and then divide it by 100. That would give us the same result. So that's going to give us 19% of the profit before tax to give us an estimate of how much corp tax we should have saved. Now, so that's perfect. We're done. We can say update layout. And as I said, this is a once-off thing that you need to do. Once it's done, it will be there in future for you. So you can see now at the bottom of this, we now have an estimated corp tax figure, which is giving us how much corporation tax or tax that we need to save. So it's saying based on this profit of £17,922, you would have an estimated tax bill of £3,400. So now you know how much to top up your tax savings bank account by. So if you have £2,500 in that tax saving bank account, you'll need to put like another £900 in to get you up to that £3,400. What you do is hit the save as and hit the mark or make custom report default and hit save. That will ensure that the next time you run this profit and loss account, this profit and loss report, that this calculation is ready for you at the bottom. You just do a quick eyeball check and you can top up your bank account by the amount that you need. Thank you for listening. If you want to hear more of these videos, do subscribe. As I said, hit that like button. I really appreciate any likes or comments. If you have any thoughts on any videos that you want me to cover in the future, let me know. Otherwise,